afternoon, everyone, and welcome to Stock Market Today for Friday, July 18th. It's Alissa Coram here. And overall, it was a pretty good week for the stock market. NASDAQ finishing at highs. And joining me now to discuss the action that unfolded this week and a little preview for what to expect in the week ahead is my colleague, Justin Nielsen, who's always prepared with some interesting tickers to watch. What do you have, Justin?
Wow, that's a lot of pressure for keeping it interesting. But yeah, we can take a look at a few interesting stocks today. DoorDash among them, kind of pulling back to the 21-day moving average line. Toast, will this be finally the time that it pops out of that toaster? And then also Vistra, because there was a lot of power in the power.
Yeah, that toast. Are we gonna get burned again? Is it nice and golden brown? We'll give you all the toaster analogies with when we look at toast here shortly. But first, let's take a look at the major indexes and check out the performance on the day and a look at the week. So on the day, the Nasdaq, the lone major index to finish in positive territory and just ever so slightly less than 0.1%, but at highs nevertheless. Meanwhile, the S&P 500 on the week, or on the day rather, down fractionally, but trying to clear this sideways range from the last couple of weeks. And for the week, up about 0.6%. Meanwhile, the Dow on the day down about 0.3%. The weekly action here basically flat. And then the Russell 2000 small caps up about 0.25% or so on the week, down some 0.6% on Friday, including a downside reversal. We'll start with a look at the NASDAQ, the strongest index right now, Justin, up 1.5% for the week.
Yeah, and it looks like 21,000 is right on the next step here. Look, since the follow-through day, the market has really done everything we could have asked of it. And you just see a number of weeks where you've got very positive action. Yes, there have been some down weeks there, but they have been mild and really haven't done damage to the overall uptrend. We've been trending above our 21-day moving average line for over 50 days, with the low staying above that line for, again, a very long time historically. You just don't have very many examples. We went through last week on some of the past examples where you got up to this level. And look, that doesn't mean for as much as there's a lot of talk of, oh, is this market long in the tooth? A lot of times the market, especially when you're kind of early in a move, can go a lot further than you think. And it might be strange to think of this as being early in the move, given how far off the bottom we are. But when you look at that 20,000 level as a breakout, we are pretty early from that breakout level. Now, look, that doesn't guarantee anything, but there is certainly a lot of strength here. And right now, this just seems to be the time to lean into that strength. And look, we had a few people. We had Eric Kroll, we had Don Vanderboord, who was on the podcast this past week, talking about how July 3rd, things were starting to trigger some of their extension levels. And what we did was we went sideways. We just kind of let those moving average lines catch up, and then it was off to the races again. Switching over to the S&P 500, that July 3rd kind of made for a nice little breakout that we just had over 2 weeks. And yesterday we saw it get above there. And look, today we were down slightly. It was just jostling back and forth, but we're still kind of up above that July 3rd level. And so if we can stay above that level, it just kind of makes a new level of resistance that should become support.
Mm-hmm. Yeah, we'll have to see. And I think also to your point about potentially being early, even though we've had a very powerful uptrend and one of the longest, it seems like, Justin, as you said, with how many days we've been above that 50-day moving average. But I love what Matt Caruso, our special guest on IBD Live this morning, said about the potential comparison between the current market and what we saw in the mid 90s. Not exact step by step, but you did have this little digestion area, couple waves down. And then when you broke out and got going into highs with the .com tech boom, hey, could AI in this cycle give us a similar result here. It's one potential precedent that we're watching.
Yeah, absolutely. And just to put it in context, I know I brought it up before, but it's worth bringing up again. Could you go ahead and just change the date to 2000, if you don't mind?
Yeah,
And let's go ahead and take a look at a weekly chart.
you
And
bet.
if you don't mind, if on the weekly chart, if you could just go ahead and go to roughly December 5th, 1996,
Okay,
if you can find that
December
on your track
5th,
price.
1996. So that's
Okay,
over
so
here.
what's important about December 5th, 1996? That is when Alan Greenspan, also known as the maestro of the Fed, the Fed chairman, gave his irrational exuberance speech on how extended the markets were, that whole irrational exuberance. And look, we did have corrections along the way. I mean, 1998 was really rough in terms of how much it corrected and how quickly it also recovered there. One
Another
of the quicker
precedent that we've
recoveries.
been talking about.
Absolutely. So, but again, when you talk about irrational exuberance back in 1996, that market had a whole heck of a long way to go. And this is a point that's been brought up by Jason Shapiro a number of times because he was trading this market and he was thinking, oh, I've got to short it, I've got to short it, it's got to go down. And a lot of times it can go up a lot further than you think. And so you got to be very careful kind of timing those tops. A lot of times it's just better to let the market tell you. And right now, getting back to the current market, we're at a market that's telling us that things are continuing to work. The leadership is still intact. Sometimes you're getting a little bit of a rotation.
Yeah.
Some things are coming more than others, but there's also a lot of these high octane stocks that are really moving. And we saw a lot of that this week.
Yeah. A couple of examples, Justin, that come to mind?
Well, if you just want to take today, I mean, Talon, TLN, Talon Energy, the power has been one of these areas of interest as it's recognized how much AI is going to require in terms of power. The data centers, the chips run hotter, everything. And look, there's a ailing power grid that we have in the US that may not be able to handle all that. So there might have to be some upgrades there. And so Talon had some news out in terms of some of the power plants that they're doing. So a 24% gain there. When you talk about utilities, that's not usually what you think of as the sexiest area. But let's kind of do a quick look at UTES, UTES, which is something we added to Swing Trader today. As you could imagine, Talon is a member here, as well as a lot of other power brokers, let's say. And this was, for utilities. I mean, this is a big move, right?
Yeah, for a utility ETF to be up 4.7% on the day, I'd say so.
Yeah, and just a few weeks ago, I mean, we were talking about Constellation Energy, CEG, on this show, and
Mhm.
that is also one of the members of Utes, as well as one of the stocks we'll talk about today, Vistra.
Yes. And another ETF, sort of in this general theme, but slightly different, is the NLR ETF, more on the uranium and nuclear side, but still this general AI power theme here, Justin. And this is a trade that you and the Swing Trader team took advantage of recently as well. So a really nice move this week, up over 8% after a couple of tight weeks. Very impressive.
Yeah, and I do have a position in NLR still. We did trim some of our position on Swing Trader just to lock in some profits
Yeah.
and also kind of move the money into some other areas. But yeah, this is a strong look. There's a lot of areas and ways in which to take advantage of this, whether it's with some of the high octane individual stocks or
Mhm.
with some of these what you wouldn't think would be high octane ETFs, but are turning out to be with some really, really powerful moves.
Exactly. And I believe we were covering this on IBD Live on May 23rd as well. So hopefully traders have been able to take advantage of some of the moves in this space, in this theme. All right. Before we take a look at our individual stocks, any other ETFs of note that we should cover, Justin, before we move on?
Oh wow. Well, we're going to get into our sector spiders. But
Yeah, we
you
can do
know,
that if we want to
yeah,
segue
yeah.
to that. Let's do it.
Okay.
Okay. So Webby always likes to sort with what was down the most on the day, but we do like looking at the relative strength line to put these moves into context with the broader market. So XLE looks like relative strength down on the week. So seeing some weakness here. I would say though that underneath the surface, there are some stocks acting differently. I know EQT is one that you've pointed out, Justin, in energy.
Yeah, there are a few. There was this other one, Imperial Oil, that I was looking at today. I think that one caught my eye. That just looks very different from XLE. That's IMO is the ticker symbol there. It's a breakout, right? It's trending above its 21-day moving average line. Its 21 is above its 50, and the 50 is above the 200. So there are these kind of individual stocks that are looking just fine in that space, but you have to be very aware. Let's look at USO, because that's USO is the oil ETF. While this is above its 200-day moving average line, there has been a lot of headlines kind of knocking this around. And then remember, energy is mostly oil and gas. So let's not forget like a UNG, the natural gas. That's just been in a downtrend, so it's a little tough for me to get super excited about XLE, but there are some
Mhm.
individual stocks out there.
Yeah, it seems more like the attention has shifted from oil and gas and energy to these other alternative energy sources in this AI age.
Absolutely.
Okay, let's move on and try to breeze through some of these. Healthcare continuing to underperform. Although I will say, what was it on IBD Live? INSM. Insmed. This is one that Scott St. Clair is keeping tabs on. Duquesne Capital, his favorite hedge fund, has a position here. So we'll just highlight that one
And for
briefly
those that
before
don't
we
know,
move
that's
on.
Druckenmiller. That's why he likes it so much. So he's like, if it's good enough for Druckenmiller, it's good enough for me.
Exactly. Okay, here's XLC Communication Services. You have your Google in here, and I believe we have Google earnings coming up next week, Justin, if I'm not
Yeah,
mistaken.
absolutely. So, I mean, Alphabet certainly is one to watch, but it has been lagging. So, Meta has certainly looked stronger lately. That is the other big head honcho of the
XLC.
XLC, and that had a little upside reversal. So it'll be interesting to see if this can get back above its 21-day moving average line. But yeah, if I had my druthers, I'd go with Meta over Google.
Yeah. All right. Well, if you want more on what's coming up on the earnings front for the week ahead, make sure to check out our earnings cheat sheet show with Alexis Garcia and Ed Carson. That dropped on our YouTube channel earlier today. So they've got the scoop for you. And let's go to XLP. This is consumer staples, a defensive area. So seeing that lagging, not really a problem for us
Yep.
as growth investors. Let's go to industrials. You have your GE, your Boeing, and your Uber in here. And speaking of GE, earnings came out this week. A little bit of volatility after the report, but still up over 3% for the week, Justin.
Yeah, so I did exit my position, and that was not because it was doing anything necessarily wrong. It was just locking in profits, or in this case, making sure I kept the profits that I had rather than risk them going away. And there were just yesterday there were other things I wanted to get into that looked better. It's also worth mentioning that Caterpillar in the industrials that has approached its old highs. That one's looking interesting as well.
Okay, let's go to XLK, the technology sector, up about 2% on the week and continuing to see that relative strength improving. So, looks a lot like the Nasdaq Composite, but the tech sector definitely seems like it's still in the driver's seat here.
Yeah, absolutely. And it's worth noting that if you look at RSPT, which is the equal weighted, that kind of lets you know, hey, it's not just Nvidia
The
here
megas,
that's
yeah.
driving it forward. It's there's a lot of broad-based technology stocks that are really helping out the indexes.
Mhm. And yeah, some strength in the back half of the week there. Let's also quickly go to the financials, XLF. We had a lot of financial earnings out this week, somewhat of a mixed bag overall. Today in the sector, we did have IBKR with a pretty strong showing here, Justin, with the stock up almost 8% in reaction to its results.
Yeah, and it wasn't alone. I mean, you had Schwab that was also looking fairly strong today, and you got a whole host of other like LPLA and others that will be, reporting soon. So certainly an area to watch.
Yes. All right. Here's the materials XLB. One area as well that we like looking underneath the surface to see if we can find some of that leadership. But overall, as a broad sector, it doesn't seem like it's one that we are overweight in at this particular juncture. Let's go to XLRE, real estate, essentially keeping pace with the S&P 500 over the last couple of weeks. But since the lows in April, really underperforming, not all too surprising. And then XLY, you have your Tesla and your Amazon in here. Tesla, one of the other big earnings reports coming up next week.
And look, this is another one. Let's take a look at the equal weight. That's RSPD. Consumer discretionary is pretty strong, So in some ways, Tesla has been a little bit of a drag on the
Yeah,
discretionary,
great.
and even Amazon, was showing a little bit of potential weakness a couple weeks ago, but that's been trending above its 21-day moving average line very nicely. But as RSPD shows, there's a lot of consumer discretionary that's looking good. And you could also take a look at XRT, which is the retail. That one doesn't look too bad either.
Yeah. And we're almost done here. Last one, the utilities. And we already looked at the UTES, UTES ETF, which was even stronger on the day. But you even have your broader utility sector Spider ETF XLU up a solid 1.7% on the day. So this continues to be a very compelling area when you're talking about utility as AI plays.
Yeah, absolutely. And just a few others to kind of add to the mix here, because you asked for some other ETFs that were looking interesting. Got to give props to Kathy Woods. I mean, she's been having a lot of success with her ARK innovation funds. So not only with ARK K, but you also have ARK Q. That had a very, very strong week this week. That's in the autonomous technology. You had ARK F, which is the fintech. Of course, you got your hoods, your circles. I do have a position in both of those. Those are in that ARC F, as well as I'm trying to remember. Oh, Shopify is in there as well. So those had a very strong week. ARC W, the next gen internet. So a lot of the ARC innovation.
You're going to come back.
Stock or ETFs really had some
Mhm.
a very strong week. You're talking about 8% gains kind of across the board.
Yeah, taking a look at ARKK, up 7.4% on the week. Quite a number of up weeks in a row here, Justin. And for those who say breakouts don't work, I leave you this chart.
Right.
It's a
Yeah.
breakout that definitely worked. If
Yeah.
you're in the
Now,
right
it's
market,
important to say that, and I do have a position in ARK K myself. It's important to recognize that they don't always work,
right?
and that's something that a lot of people have to remember, that, you can have the most perfect looking base, and that just says that there's maybe a higher tendency.
Yeah.
But there's no
Mhm.
guarantees here, and that's why we have our risk management rules in place, and we have profit taking rules. The whole portfolio management rule base is to kind of help you hold through the ones that deserve to be held and get rid of the ones that
Right.
deserve to not be held.
Yeah. And as traders who are actively managing our portfolios, I think this is also an example of where there's a time and a place, right? For all sorts of ETFs, uh, thematic exposure, what have you. And with something like this, the fact that you're seeing this outperform, whereas you have it's a very technology focused, but also some that are more in the long term bet kind of category, or a little bit more speculative. I feel like that
Right.
gives us a sense of what's being rewarded in this type of market, Justin.
No, absolutely. And I mean, to that end, speaking of speculative, I mean, you've got your quantum computing. I don't know if there's an ETF that focuses on that, but we've
I'm
seen a
sure
number
there
of
is.
the quantum computing stocks doing well this week. Want to give also recognition FFTY, the Innovator IBD 50, just kind of again showing that growth has been, really doing well lately. And then one more, UFO. Andrew Channon has been on the show, the podcast, a couple times. This is a space ETF, and we've got a lot of space, related stocks. Rocket Lab, ASTS are two that I know are in this one, and those have been doing very well.
Yes, absolutely. And just a quick web search, and here's one quantum ETF for the radar here, the QTUM.
Oh,
Just
and then one more
there's
ETF to
another
just kind of recognize is China. Pick your ETF. There's KWeb, there's FXI, but this had a pretty
great
solid
week.
looking week, breaking out of this kind of tight area. Now, look, I haven't done this myself, so China comes with its own set of warnings, but
Mhm.
we would be remiss not to
Include it.
recognize that there was some movement there.
Exactly. KWeb, the China Internet ETF, up 7% on the week, and FXI, which you mentioned, up about 4.3% on the week. All right, let's turn our attention now to some stocks of note, starting with DoorDash, up 1.8% on the day, right after kissing that 21-day moving average for the first time since it really got going in May.
Yeah, so there's we have that green shaded area that lets you know, okay, this is kind of your 20 to 25% profit taking goal. And it's amazing how often stocks will get up to that level and they'll decide to, take a little bit of a break. Now, you had a little bit of a break before and it just kind of skirted its is that your 10-day or did you switch it to the 8?
I haven't switched it back. Right now, it's the 8 exponential, the
Okay, 8
pink.
exponential. Close enough. It's they're pretty closely related. So, but yeah, you did have, these pauses along the way. And look, those are
Mhm,
healthy. It keeps a stock from getting too far ahead of itself, too far extended. Those are healthy digestions of gains. But the fact that this has been trending above the 21-day moving average line, and as you said, just kissing that 21-day moving average line this week and getting a nice bounce and recovery
mhm.
today, even with a lot of stocks, kind of mixed and the indexes pretty flat. The fact that this was able to gain nearly 2% with that support is certainly, I think, something worth watching.
It is. So it seems like, Justin, for those who got in around the leaderboard entry, which was roughly when it cleared the 207 area in May, I believe, perhaps this was a chance to add to an existing position, or some traders may have initiated here with this type of setup.
Yeah, and again, you have kind of a level now, with the low of yesterday, that can give you a stop where you're really not risking that much, just a couple percent here, that you're risking if you enter here, and that gives me some comfort to initiate a position, even if I'm a little late in the move, because I will quickly know when I'm wrong if it goes south, and I can cut my loss quickly, not get hurt too much. But there's a lot of upside potential here. You look at some of these numbers, and this is let's go ahead and go to the weekly. Oh, we don't need to. It's the annual is right there. I forget that, but
That's okay.
you're seeing that this is going from negative EPS to just in 2024 to positive EPS, and now it's really ramping up that those estimates. So that's something that is really looking positive. You've got some very strong revenue growth. So this is no EPS accounting tricks here. This is
Right.
this has got some strong growth here, and these are not small numbers. Having
Yeah.
20% plus with billions of revenue in each quarter. That's nothing to sneeze at.
Yeah. And as a busy millennial, I can't say how much of a fan I am of DoorDash. It's come in clutch quite a bit. So I definitely get the fundamental story here. All right, let's go to Toast, Justin. What a tricky stock. But this week, if you go to a weekly chart, up 7.2% for the week. So finally breaking out after an attempted breakout the previous week.
Well, and here's again where sometimes, for people that are saying, "Oh, look, breakouts don't work," you could, look at this one.
Yeah,
This is one where
they
you
can be
might be thinking
tricky.
that if you want to counter Allie's argument, but
Yeah.
Look, that doesn't mean that it doesn't always work. Sometimes these stocks will kind of change their personality, and it remains to be seen. I think it's too early to tell on this one, but
Yeah.
this was a strong move above that resistance, and so now it's a matter of, can it stay above there? Look, it's not going to be unusual if this comes in and tests that area. That's very usual, but sometimes these stocks will try once, twice, even three times, and then by the time everyone gives up, that's when it finally goes. And just honorable
Mhm.
mention to ALAB, Astera Labs, which was kind of doing the same thing. A lot of tests of this 100 area finally broke through. We'll see if this can continue from here. But
Mhm.
also, it's important to kind of note that a lot of restaurants had been looking good for a while, so Toast could potentially benefit from that. And we also, I believe this was our stock of the day today, so that might be an article worth checking out.
Absolutely. There it is right there. And this is also why, I mean, the personality of a stock is something worth studying. And it's also why I really do like trying to find entries when possible around the 50-day line, and then maybe adding on a breakout because this is still holding its major moving averages, Justin. It's just been a little volatile, a volatile, choppy ascent here.
Yeah, and
And
you know, it's fine if you decide to pass on that.
exactly.
I did myself.
Yep.
I didn't buy this last time. We put it on Swing Trader, but I'm like, yeah, okay. But
Yeah.
again, it doesn't mean that it can't work. And
Mhm.
as long as you have risk management in place, you
Right.
could even do a tighter stop. And no, hey, I might get shaken out again, but as long as you're kind of managing your risk, you can really
Mhm.
kind of give yourself that wiggle room to buy things and give them a chance.
Yeah. Okay, let's round things out with a look at VST in that utility electric power group that we've been focusing on, up 6% today, Justin, and arguably actionable. Not a very traditional entry point, but an entry point here nonetheless. And I feel like a lot of the strongest stocks off of the lows, and this one has more than doubled from its low of 90 back in early April, kissing that. I don't know why I'm saying that. Touching, very, just very loving today. It's touching
Yeah,
that
well,
200 level, pulling back, trying to mix up my words here of descriptions. I've only been doing this 10 years, and now all of a sudden twice in one show. I guess it's just sticking with me here. But up 6% on the day, I think actionable. What do you think?
yeah, and look, this is something that Leaderboard got into, I think, back in June. So they're looking at a
Mhm.
10% profit on this. And make no mistake, when you have something that's trending above the 21-day moving average line and then breaks it, like what happened on Wednesday here, that can be a cause for concern, especially if you're raising up your stop along the way. I think moving average lines are a great a great way to kind of create a trailing stop for yourself without basing it on a percentage. You're just kind of letting the stock dictate, where your trailing stop goes. But that doesn't mean like, hey, if you locked in some profits there, you could potentially get back into this, and it doesn't have to be this one. As we saw, there was a lot of strength in utilities, so you have your pick, but it's certainly worth looking at some of the past leaders, ones that maybe you've played, because sometimes you can find second chance saloons in
Yeah.
those.
Absolutely. And we'll keep a very close eye on that 200 level, which is where the stock topped out before that deep seek news in January. All right, Justin. Well, thank you so much. Any final words as we prepare for the week ahead?
I know we don't have a Webby here, but I wanted to just kind of give a little, nod to his Webby RSI and the Bob Marley that he typically shows. Look, the Bob Marley is really more for when you're, getting those corrections, and when you're off. How much are you off highs? Are you in the
Right.
green and you're in the yellow? Look, we don't even need to pull up a chart. We're in the green, folks. We're at highs, so we know exactly where we're at, and that's a great place to be. In terms of the Webby RSI, even that, we really aren't seeing those levels of extension that would cause a lot of concern. We're kind of at the two, underneath the 2 ATR level for both the 21 and the 10 day extension. That would be the histogram and the line, so really not too far extended. I think this latest little little sideways action that we had since July 3rd went a long way
Mhm.
and kind of letting those moving average
Right.
lines catch up quite a bit. So that's keeping us in a framework of not too extended. A lot of stocks offering opportunities, breakouts, pullbacks. Moving average lines. There's a lot out there, so this is a great time to do your watch list. Be ready, and as you mentioned earlier, a great time to also be looking at those earnings that are coming up.
Yep.
So Ed and Lexi do a great job of kind of rounding that out. I mean, I think we've got 200 S&P 500 stocks, over 200 in the
Wow.
next couple weeks that we'll be reporting. So there
Mhm.
is the deluge coming. Be ready for it, and
Yep.
you might not be buying straight ahead of those earnings reports, but sometimes those earnings reports will be a catalyst and certainly worth watching for potential entries. Or even if you don't catch it on an earnings move or an earnings gap, be looking for those
Mhm.
digestions because those can
Yes.
also give you second chances.
Mhm. Well said. And I'll add in my 2 cents on Webby's perspective without him here as well. My favorite chart that we always look at is the keep it simple chart, which is just your 21-day moving average only. And where's the Nasdaq and the S&P 500 versus the 21-day? We're continuing to hold nicely above that level. So seems like we've got the green light from that perspective.
Yeah, well, you know what? I'm wondering if you went with the keep it simple because they a lot of times say keep it simple, stupid, and they call it kiss. So here you are, right back at the kissing.
Who knows, Justin? All right. Well, that's it from us for today. Thank you. We appreciate it, Justin.
Okay, thank you.
And if you want more from Justin Nielsen, check out this week's podcast, which he mentioned with special guest Don Vandenborg. It was a fantastic discussion looking at how to build your portfolio when you see a market turn, how to get that exposure in the early going when you don't know what the leaders are. And then when you do, how you can look at that leaders list to inform the market's health and so much more. So check that out on our YouTube channel or at investors.com/videos or wherever you get your podcasts. That's it from us for this week, everyone. Thanks again for watching. We hope you have a great weekend, and we'll see you back here next week.